Inflation remains persistent in the United States. The December CPI comes in slightly hotter than expected, giving way to expectations that the Fed may now delay interest rate cuts. All eyes now on producer price index inflation tonight. Stocks end the session on a flat note. Stocks in the Asia-Pacific trade largely lower after the U.S. inflation report. The Nikkei, however, surges 2% to hit a record high, while investors also await release of key data from China. The GIFT Nifty is also indicating a muted start for the Indian market. Crude prices surge. Brent heads to $79 a barrel as tensions heat up in West Asia after Iran seized an oil tanker. Bitcoin rallies to two-year high of 49,000 but comes off highs as crypto ETFs make their debut on the street. TCS beats muted estimates in Q3 with a dollar revenue growth of 1%. Margins also expand sequentially to beat estimates. Seasonality and weak macros hit Infosys third quarter numbers as revenue declines. The company also narrowed its FY24 guidance to 1.5% to 2% from 1.1% to 2.5% earlier. And in earnings today, Wipro is expected to report its fourth straight quarter of declining revenue, while margin too may be under pressure after wage hikes. Meanwhile, HCL Tech is likely to report the highest growth amongst peers with expected sequential revenue growth of 4%. Good morning. In the Mumbai News Center, I'm Sonal Bhutra and you're watching Power Breakfast. Those are the top headlines. Definitely a lot of cues, be it from the US markets or our own markets in terms of earnings as well. We'll, of course, discuss that in greater detail through the course of the show. But first up, let's take a look at the Asian markets. It was a flattish handover that we got from Wall Street, but the Asian markets, they are mixed, so to say. We have the Taiwanese index, which is down 0.3%, the Hang Seng, which is lower by around 0.2%, but Nikkei is the one which is surging in how it is at a fresh record high, surged around 2%, and then closed higher by around 1%. So that is one particular market that continues to do well. There is some macro data and the trade data which is expected in China as well. So a whole host of cues in the Asian markets as well. Let's quickly take a look at the GIFT Nifty as well, because that is the one which will indicate the moves for our own markets. The implied open is around 32 points in the green. That is what the GIFT Nifty is suggesting right now, above that 21,700 mark. So we'll see which way things go, because we do have the two big heavyweights, IT and TCS, which will be reacting to the numbers, and IT has a big weightage on Nifty as well. Let's talk about the US markets now. Wall Street ended near the flat line after a fresh round of inflation data reflected an uptick in consumer prices for December. While Dow Jones eked out a gain of 15 points, S&P edged lower by 0.07%. Meanwhile, the tech-heavy Nasdaq closed at the flat line. The US Treasury yields also declined even after higher than expected December inflation report. Consumer price index for December rose 0.3%, pushing the annual rate to 3.4%. CNBC's Rick Santelli gets us the highlights from the December CPI report.
Our consumer price index read for the month of December by the Bureau of Labor Statistics, expected to be up 0.2%, is up 0.3%. And if you strip out food and energy, it is exactly as expected, which is up 0.3%. Just like in the rearview mirror, that headline number is 0.2 higher than the rearview mirror, which was up 0.1, and the prior month, October, was at 0. That was the lowest since May of 2020. Let's go long here. Year-over-year CPI expected to be up 3.2, is up 3.4, up 3.4. The best it's been was 3.0 in June of last year. That was the best since March of 2021. And finally, there is progress. My favorite, the CPI core, year over year, which has not been below 4% since May of 2021. I could now take that out of my repertoire of what I say on CPI day, because 3.9%, 3.9%, which is the best since 3.8 in May of 2021. Now, here's something I normally don't discuss. If we look at the index itself, the non-seasonally adjusted actual index, it came out at 306.746.
Okay, all right, that's about the CPI number for the month of December. Let's also listen into some important opinion coming in from market experts on the December CPI print and a lot more.
It was a noisy print. We got another disappointment on homeowners equivalent rent, still not telling us what the real world is telling us. But in general, I think it's just noisy, and the underlying disinflationary trend is very much intact. And I do think that rents are going to come down as the year progresses. And the most important issue for the markets is the pivot is unambiguously in. The data have said the Fed is finished. The Fed effectively has said they're finished. The next move is a cut, and it's going to be a series of cuts to take us back to neutral.
Okay, all right, that's the global market action, but how will these overnight cues impact our own markets? We have a research team joining in to tell you just that, the trade setup, the stocks that are likely to be in the news, and the action from the F&O space as well. Hey guys, a very good morning to all of you. It's a Friday morning, so we do have the Friday cheer, but will that convert into Friday cheer for the markets as well? So Darshan, tell us all about the market cues.
Morning, Sonal. So it looks likely that the overall setup for Indian market is looking positive, and we had earnings from two IT majors, TCS and Infosys, and both the earnings were largely in line or better than estimates. And tracking that, Infosys ADR was up 4% overnight. On global front, we had two major data points. CPI inflation, which came higher than anticipated at 3.4%, and the second data point was US 10-year yield, which is back below 4%. Coming to our market, for Nifty, for second day in a row, it was just about one stock, that is Reliance. It contributed more than 50 points and helped Nifty hold on to the level of 21,600. For Nifty Bank, its biggest two weighted stocks, ICICI Bank and HDFC Bank, have underperformed, but support came in from banks like RBL, IndusInd Bank, which have high unsecured personal loan exposure. Because yesterday, RBI governor in his statement said the amount of unsecured personal loans in the system are not at an alarming level. On to institutional activities, FIs have sold shares for third day in a row, and for January, now they are net sellers. On Thursday, FIs have sold shares of Rs 865 crore in cash market, while DIIs have bought shares of Rs 1600 crore. For today, GIFT Nifty is indicating a start with minor gains. And some more cues for today. We have India CPI for December, which is estimated at 5.9%. We have IIP for November, which is estimated at 4%. Also, we have HDFC Life, Wipro and HCL Tech, which will be reporting earnings for the third quarter. On global front, we have earnings of JP Morgan, Bank of America, Wells Fargo and Citigroup.
Is earnings heavy day and week as well. But other stocks that will be on our radar. Homas, tell us about that and the earnings as well.
Absolutely, and I'll start off with Infosys. That will be the big one to watch out for. As Sudhu was highlighting, the ADR was up 4%. The company has revised its guidance again, and they have now revised the guidance to 1.5% to 2% from 1 to 2.5% earlier, which means that they have trimmed the upper end, but they have raised the lower end of the guidance. But they have maintained the margin guidance at 20 to 22%, and they have also announced an acquisition worth 280 crore rupees. So we'll keep that on our radar. TCS, where US dollar revenue was surpassing our expectations, expecting a 0.2% drop, but it came in at a growth of 1% from last quarter. New deal wins for the quarter was $8.1 billion compared to $11.2 billion, which they won in September. And the company said that the deal win number was without any mega deals that they won. Now, Polycap continues to be in focus. They have reiterated that they have not yet received any communication from the income tax department. But the block deal which took place yesterday in the stock saw small cap world fund selling around 8.5 lakh shares at around 3,900 rupees. And the stock, remember, is in the F&O ban for today's session. Mahindra & Mahindra will invest around 630 crore rupees via rights issue in its subsidiary, which is Mahindra Electric Automobile. And MEAL will use these proceeds for business operations. Nykaa might see a block deal today where Lexdel International is likely to sell around 2.5 crore shares in a deal which is valued at around 490 crore rupees. And there'll be a lock-in period of 45 days post this transaction. Concor came out with its business updates. Domestic volumes were down, but overall volumes were up 6% year on year. HG Infra has been declared an L1 bidder for a 716 crore project by the Central Railway. And lastly, LIC will remain in focus because it has received yet another tax demand. This time it's around 3,500 crore rupees. Back to you.
Okay, all right. So those are the stocks that will be on our radar. Thank you, Hormas, for that list. Let's talk about the F&O space as well. Manglam is joining us now. Hey, Manglam.
Well, you know, 4 out of the last 5 occasions on our markets, the Nifty has actually faced some resistance between the 21,700 and 21,750 mark. As you would see, the day's high on the Nifty over the last 4 or 5 trading sessions comes up for you. You know, we have seen a reversal from this mark itself. The GIFT Nifty implies a positive start. So let's see whether we go ahead and convincingly cross past this resistance zone itself or not. The big reason for that conviction would be the kind of contribution that will come in from the IT pack itself. However, the FIIs believe that the markets will still be in a range, which is why there's been a mild purchase in index options. Stock specific is the way to go, and that's what we've seen. Close to around 1,700 crore worth purchase in the stock futures itself. Since we're talking about individual stocks, let's talk about Infosys. The ADR was up 4% yesterday, but from an F&O standpoint, the maximum open interest is at 1,600 call. So, you know, 1,600 is the mark that everyone is looking at as a near-term congestion. That's the kind of upside that we have on Infosys. For TCS, the range is 100 rupees between 3,700 and 3,800 because that's where the maximum open interest on calls and puts are itself. For the Nifty itself, you know, for once it crosses past this congestion that we are talking about, the next level, of course, would be the previous all-time high of 21,834. But for that, we have to convincingly cross 21,750 itself. The 20-day moving average on the Nifty bank is extremely crucial, so that's something we'll be watching out for. Polycab has entered F&O ban as expected. Delta Corp has re-entered F&O ban after exiting it yesterday. And we have BHEL, which too has entered F&O ban. Keep an eye out on IEX, Balrampur Chini and Chambal Fertilizer. All these 3 stocks have exited F&O ban.
Okay, all right. So those are all the F&O cues. Thank you guys for joining us today and prepping us up for this trading day ahead. We'll slip into a break, and of course up next we'll talk about the IT giants TCS and Infosys. They have reported their Q3 numbers, so we'll get you the earnings, fine print and analysis on the other side. Stay tuned. Welcome back. You're still tuned into Power Breakfast on CNBC TV18. It is time to talk about earnings corner. TCS and Infosys delivered a largely steady performance in what is a seasonally weak quarter. TCS beat muted estimates on 1% revenue growth, and Infosys saw its revenue and margins decline sequentially. Meanwhile, Infosys ADR surged even as the company reported a drop in net profit. Reema Tendulkar is here with the Q3 report card.
The IT earnings season has kicked off on a not such a bad note. Not as bad as what the street was fearing. TCS, in fact, is a beat on both revenues and margins. And Infi, muted quarter, weak, but not as bad as what the street was fearing. So TCS has reported a constant currency revenue growth of 1% versus estimates of a flat growth or no growth, while Infi has reported a revenue decline of 1%, but the street thought the revenue decline would be a lot more, maybe 1.5% going up to 2%. Margins for the two companies have come in pretty okay. For TCS, it's a margin expansion of 70 basis points to 25%. While for Infosys, there is a margin contraction of 70 basis points, but that's an account of a wage hike. Both companies have reported a decline in their deal wins on a quarter-on-quarter basis, but Q2 was a record quarter of sorts for deal wins for the companies. So Q3 deal wins are lower quarter-on-quarter, but it's largely in line with the company average. The attrition for both companies have ticked lower. For TCS, 13.3%, for Infi, 12.9%. Headcount is moderated again for both the employees, for TCS as well as for Infosys. For Infosys, it's the 4th consecutive quarter of a headcount moderation. TCS's growth appears to be boosted by BSNL. But other than that, if you strip that out, you look at the core market of BFSI, North America, that continues to remain under pressure for TCS, and it's a similar picture painted by Infosys too.
Okay, Reema, thank you so much for that. And here's a word from the management of both the companies.
We've been winning very good deals in BFSI as well. And we have a very good pipeline. So we are confident medium to long term growth will return there. There is no major changes, discretionary, not discretionary, but the project focus tends to be more on cost optimization. All the projects that we won recently, all of them we've been continuing to execute mostly as per plan, and so there is no rethink on what we signed in recent past as well.
As we get closer to the end of the financial year, we've tightened the the revenue growth guidance. The margin guidance remains the same. We see the outlook in essence quite similar, but the guidance is tightened. That's how we're seeing it. based on what we've seen in the first 3 quarters. On the budgets, I think that was one of the questions on what we're seeing with the budgets. At this stage, we have not seen any different behavior from clients.
And the management of TCS will also be joining us later to discuss the numbers. CFO Samir Siksaria and HR head Milind Lakkad will be joining us at 8:25 a.m. CEO K. Krithivasan and Chief Operating Officer MG Subramaniam will be joining in at 8:45 a.m. And with that, we'll slip into another break. When we come back, we'll talk all about the cues from the commodities market, so stay tuned for that. Welcome back. You're still tuned into Power Breakfast. Well, that's a lot happening in the commodity space as well. Manisha Gupta is joining us to give us a lowdown. Manisha?
Well, thank you for that. I'll start with the crude oil prices, which have surged more than 2% in Asia as we see it right now. And this is even after the Chinese inflation numbers have not been so great. What really seems to be impacting markets is that US and Britain have carried airstrikes on Houthi-controlled areas of Yemen. So that tells you that this is far from over. And in the meanwhile, the Hamas-Israel war is also quite on there. And the markets do believe that with what's happening at Red Sea, there could be a delay in transportation of crude oil, and that would start impacting prices sooner than later. Iran had, remember, seized an oil tanker with Iraqi oil in Gulf of Oman as well. So this really seems to be spreading right now, and this premium is what is building up in prices at this point. Adding to that is the U.S. weather, which is predicted to be cold between Jan 13th to 22nd. That means the demand could be on the stronger side as well. So all of that keeping the prices firmer.
Okay, all right. So that is about crude oil prices. Prices firm at the moment. Thank you, Manisha, for joining us with that update. Moving on now to a big infrastructure development. The Mumbai Trans-Harbour Link is set to open today. The Atal Setu will connect Mumbai and Navi Mumbai and reduce travel time to just about 20 to 30 minutes from 2 hours earlier. We have Santhya joining in from the side. Santhya?
See, right now we are at one of the points from where we can show you how the new MTHL, this bridge, looks like. So this is the bridge, also known as Atal Setu. Maharashtra government claims that this is the longest sea bridge across the country. This is the longest sea bridge of India. This is 22 kilometer long, 21.8 kilometer to be precise. It's a 6-lane bridge. Now this is going to connect Shivri to Nhava Sheva, which means it is going to connect the southern part of Mumbai to Navi Mumbai. For the understanding of our viewers who are not from Mumbai, so Shivri falls under the southern Mumbai part, and it's going to connect, this bridge is going to connect that part of Mumbai, southern Mumbai, to Navi Mumbai, which is Mumbai's twin city. Now, Navi Mumbai in the last few years has seen a massive growth in the population, which means that the travel was a big problem considering the traffic and the timing. Now, this particular bridge is going to cut that traffic time by more than an hour and the distance by 30 kilometers. Now, the construction of this bridge, it started in April 2018. The initial estimated cost was around 14,000, which because of a delay due to the pandemic, it increased up to 16,000 crore. Now, the Maharashtra government claims that, as I said, it's the longest sea bridge, but it also claims that the state-of-the-art technology, which is used by the Maharashtra government, is going to set this bridge apart from any other bridge in the country. Now, one such thing is specially designed light poles. Because of the monsoon pattern in Mumbai, the high velocity wind always usually cause a problem when it comes to driving. So Maharashtra government claims that this particular bridge has specially designed light poles which will take care of that. Also, it's going to be a pothole-free bridge. That is going to be a massive relief for the people who will take this particular bridge. Now, this is going to first, the connectivity, if I talk about that, of course, it's going to connect the southern part of Mumbai to another city, that is Twin City. of Mumbai, that is Navi Mumbai. Not just that, it is also going to connect the western suburb part of Mumbai to this particular, to the eastern bit, that is via the Worli-Shivri connector. That construction is still going on. In fact, another connection which is going to happen is this bridge is going to connect, it's going to give a direct pathway to the Navi Mumbai airport, which is under construction. As of now, MMRDA and Maharashtra government, they are expecting that there will be an inflow of around 40,000 vehicles.
Okay. All right, Santhya, thank you so much for bringing us all those details, going to reduce travel time. So good news for Mumbaikars and people living in Navi Mumbai as well. Thank you for joining us. And with that, we'll take your leave on this edition of Power Breakfast. Bazaar Morning Call comes up next.